Talking about you don't need to own it to profit from it. Now let's talk about, how to start investing with little money. Investing might seem, intimidating, especially if you don't have a lot of money to start. But trust me, you can own portion of companies without owning the company. You can invest in companies without owning them. So, but the truth is that you don't need thousands of dollars to begin investing. Getting started now can be one of the best decisions you will ever make for your financial future. Thanks to platforms like, Trading 212, platforms like True Finance, platforms like Reinvest, investing has become more accessible than ever, even for beginners with limited funds. In this discourse, we'll walk you through some steps to start investing with small amount of money and profit without owning it. The first thing you need to understand is understanding the basics of investing. Before diving into the world of stocks, bonds, or other investments, types, it is essential to understand a few basic concepts, which is one, investment. Putting your money into something like stocks, real estate, with the expectation that it will grow in value over time, whereby you can profit without having full control or owning it in total. Then we'll talk about risk, the potential for losing money, which comes with every investment. So the tendency of losing is likely. Then we'll talk about returns, the money you make from your investment, either through price appreciation when the price of the stocks go up, or dividend payments made to shareholders. So you can profit without owning it 100%, even with little capital or with little money. So, but the key takeaway, is that investing is about making your money work for you over time. And the earlier you start, the better. The earlier you start, the better. And one thing, you need to start small. You don't need to have a lot of money. You don't need to own it completely to profit from it. So you might be surprised to learn that you don't need large sum of money to begin investing. In fact, many platforms allow you to invest with as little as $1. Platforms like I said, True Finance, Reinvest, Trading 212 allows you to invest with as little as $1. This makes it easy for beginners to enter the market without taking on excessive risk. Now, here's how you start, with small amounts of money. Fractional shares. Platforms like Trading 212 offers fractional shares, which allow you to buy a portion of a share instead of purchasing an entire share. For example, if a stock costs $200, but you only have $10, you can still buy 5% of that share. True Finance, Trading 212 allows you to carry out this operation. So low minimum investment as well. Some investment accounts, like the True Finance, Trading 212, and Reinvest allows you to start with as little as $10. This is perfect for beginners who might not have, a lot to invest upfront. And again, you decide the right investment platform, because choosing the right platform is crucial when starting with your finance or when starting with little money. So like I said, True Finance, Trading 212, Reinvest are beginners friendly. They are platform that's designed to help you invest easily with low amounts of money. And it offers various investment options that make it simple to get started. Low fees. Trading 212 offers low fees for investing in fractional shares. Likewise, True Finance offers low fees when investing in fractional shares. But Reinvest allows you to invest, have low fees as well, but you can't get fractional shares, but a whole share. And you also think about automatic investing that allows you to set automatic contribution and trade, so you can invest regularly with even small amount of money. Like you want to invest $5 per week or $10 per week. These platforms allows you to invest in it via the automated system of investing. And you still need to consider, index funds, ETFs for diversification. Because if you are just starting out and you don't have a lot of money to invest, it is wise to consider, index funds and ETFs. ETF stands for exchange traded funds. I've done a video on that, because these are ideal for beginners, because they allow you to diversify your investments with small amount of money. So the question will be, why choose ETFs or index fund? One is for diversification, because both index funds and ETFs gives you exposure to a wide variety of stocks or bonds or assets. So you are not putting your money into one company or asset, because this reduces your risk. And also, many index funds and ETFs have low fees, making them perfect for those with limited funds. So these funds often charge major indexes like the S&P 500, meaning you can invest in a broad variety of the market with minimal effort. We also have the All Share Index in the Nigerian Stock Exchange that tracks all the stocks or all the companies in Nigeria. And also, for passive investing is one of the key reasons for choosing index funds or ETFs, because they are often passive investment, meaning they don't require active management. This makes them easy to buy and hold for a long time. So using the dollar cost averaging method to invest gradually, because it is crucial when starting with little money. Because when you are starting with little money, one of the smartest strategies is dollar cost averaging. This involves investing a set amount of money at regular intervals, regardless of the price of the investment. So you can invest periodically with little money. Because having this system reduces the impact of market fluctuation, because by investing regularly, you avoid trying to time the market, which is nearly impossible. And instead, you buy at different price points, averaging out your costs. And it also helps you stay consistent, because the dollar cost averaging encourages you to make small, manageable investments over time. So even if you are on a budget, you can still participate in the market without overwhelming yourself. Because, for example, if you invest $50 every week into your ETF, you buy more shares when prices are lower and fewer when the prices are higher, which helps spread out your risk. So investing in ETFs and index funds is not about getting rich overnight. It's all about patience. It's about building wealth over time with little money to start. So your initial returns may be modest, but over time, your investments have the potential to grow, especially with the power of compounding. So to start investing small, with little capital, with little money, you need to set a clear goal. You need to know why you are investing. You need to know for what reason you are investing. Are you investing for retirement, to save for a down payment of a house, with short-term goals like travels or education? So knowing your goal helps you choose the right investment, strategy. And you have to be patient, because the stock market tends to go up and down, but historically, it has provided solid returns over the long term. So patience is key. Let your investment grow over time and avoid making emotional decisions based on short-term market movements. Keep learning and stay consistent, because the more you learn about investing, the more confident you become. Take advantage of educational resources that is available, to help you make informed decisions. Another special advice: starting small, tracking your progress. Check on your investment to see how they are performing, but try not to be obsessed over short-term fluctuation, because generally speaking, the short-term fluctuation of your investment or of the stock market is always overwhelming. Sometimes you get obsessed with this fluctuation and then you exit and then you lose out. And also, starting small with little knowledge and understanding is not a bad thing. But one key thing you need to put at the back of your mind is you need to try and stay informed with market news and market trends to understand factors affecting your investment, because there are so many factors that affect investment, which ranges from government policies, to inflation and other global, crises can affect investment. So the more informed you are, the better equipped you will be to make sound decisions. And also the power of compounding when it talks about reinvesting your dividends to see gains. So if you earn dividend or see gains in your investment, consider reinvesting them to grow your wealth over time. So the best time to start investing is now. Starting investing with little money is entirely possible. Like True Finance, Trading 212, and AfriInvest makes it easy for beginners to get started with low cost options and small amount of money. So by taking the first step, you set yourself up for long-term financial success. Focus on consistency, patience, and smart strategies like dollar cost averaging and diversification, and your wealth will grow steadily over time. What are you waiting for? Even with limited funds, you can begin your investment journey today, and your future self will thank you later. You don't need to own it to profit from it. Remember that. Until we meet again, like, share, and subscribe to this channel. It's still your boy Young Diamond. Peace.